What does the future of Bitcoin look like? Bitcoin has been around for over a decade now. Introduced in 2008, Bitcoin's main goal is to eliminate middlemen. The use of Bitcoin. The US Department of the Treasury has defined Bitcoin as a virtual currency. While it is often described as the first cryptocurrency and the largest by total market value, currently $1,451.67 billion, the 14th of May 2021. The general consensus is that Bitcoin will take the world by storm, but we are yet to see the storm. This storm has also been shown to uproot the commercial banks as we know them today, a severe drop among bank depositors, a negative for top bank revenue. As it is, well-known companies that accept Bitcoin for payment include Amazon, Apple, Expedia, Overstock, Subway, Reddit, Microsoft, Dell, Tesla, Bloomberg.com, Kmart, Sears, Gap, Victoria's Secret. Bitcoin figures are few and far between, but with over 100,000 merchants and vendors accepting Bitcoin payments, the numbers show that progress has finally been made. The number of merchants accepting Bitcoin has doubled 4 times from 2014 to 2015 alone. Research conducted by the University of Cambridge concluded this year, 2021, that between 3 million and 6.8 million unique users are actively using crypto wallets, most of them using Bitcoin, much more than the estimate of 0.3 million to 1.3 million unique users back in 2013. The advantage for consumers is reduced transaction fees, where merchants and providers accept Bitcoins with fees ranging from 0% to less than 2%, definitely more competitive than credit card fees. The obvious downside is lack of protection for consumers or sellers for that matter. Bitcoin users are not covered by the right to refunds and chargebacks, although this is changing. The latest news is the legalization of Bitcoin usage in Russia, with Japan passing a law accepting Bitcoin as legal tender, perhaps even more appealing considering how far behind the law is. In other G7 countries, let alone the G20, despite being widely accepted, the value of Bitcoin has certainly been held back due to a lack of recognition and regulation in key economies, suggesting that Japan's move could start a domino effect, which will greatly benefit those Bitcoin bulls, considering the fact that the value of Bitcoin increased by 8%, or $2 billion, to bring the market cap to $3 trillion. In the end, Japan's move makes sense, and Russia is looking to follow suit, with the lack of regulation allowing Bitcoin to be used as a means of laundering. Russia is looking to legislate to recognize Bitcoin as a financial instrument next year just for that reason, and we can expect other countries struggling with money laundering to follow suit. Bitcoin future conflict. There is a long way to go before Bitcoin becomes a globally accepted form of currency, virtual or not, with some counties having outright banned the use of Bitcoin, although the number of countries is dwindling. With the broader issue of Bitcoin's lack of regulation coupled with concerns about the limitations of the technology, technological developments in the short to medium term will inevitably affect the value of the market, and, as the global regulatory landscape evolves, we expect usage and demand to increase, boosting value. Profit types are not clear in cash, currently maintaining the status of cash is king. The bottlenecks will inevitably limit transaction volume in the short term, leaving the door open for more traditional payment methods to compete, but it will only be a matter of time before the payment system is implemented. Upgrade and Bitcoin has the opportunity to become the main payment mechanism. Ultimately, the success and growth of Bitcoin across mainstream economies and beyond will likely depend on the attitudes of central banks. The PBOC earlier this year announced that it will be making a larger effort to regulate the Bitcoin market, including setting up a task force to examine and ensure Bitcoin exchanges are appropriately anti-cryptocurrency washing system, warning exchanges that they will be closed if violated. The PBOC actions resulted in some exchanges shutting down, resulting in Bitcoin losses at the time. Finally, the fact that the PBOC is looking to clean up and increase oversight is a positive in the long term and suggests that Bitcoin usage will increase in the coming years, despite the short-term decline caused by increased surveillance. Satoshi Nakamoto's intention is ultimately to knock central banks out of their favor. The inventor of Bitcoin has openly discussed distrust of central banks. The development of Bitcoin has certainly opened the eyes of many, raising the question of the need for central banks for Bitcoin to be the method of choice, as there would be no requirement for the development of Bitcoin. Execution and payment. The use of Bitcoin may eliminate certain roles of central bankers, but ultimately Bitcoin will never be responsible or even able to influence monetary policies. Central banks will ultimately continue to hold the fate of Bitcoin in their own hands. Regulation and acceptance at the government level crucial to its success and continued cross-border growth. At the moment, central banks seem to be hard at work looking at the technology that Bitcoin has introduced, looking to use a decentralized record-keeping method, commonly known as blockchain or distributed ledger, dynamics, is to complete and record transactions in a more efficient real economy. The BO and PBOC are certainly proponents of a decentralized approach that allows their respective central banks to track their respective currencies through the financial system in real time. The BO has estimated that using a digital currency on a distributed ledger could add 3% to a country's economic output through efficiency gains alone. FOMC members and the Fed chair have also spoken positively about distributed ledgers, with voting member Brainard talking about the benefits of using such innovative technology just last week. Interestingly, the fact that central banks are beginning to embrace the technology, which has been developed to dethrone them, may eventually strengthen the position and power of central banks, although then it will be very difficult for them to try to unravel the same technology in a bid to sabotage Bitcoin. Currently, Bitcoin may have a mixed following, but there are a number of countries that are finally considered Bitcoin friendly, with the list likely to continue to grow as more governments acknowledge and legalize it. Bitcoin usage. Countries that especially love Bitcoin: USA has the highest number of crypto users, highest number of Bitcoin ATMs, and also has the highest Bitcoin transaction volume globally. The US is home to Silicon Valley after all, and that certainly bodes well for the future of Bitcoin, with many countries looking to the US for guidance and best practices. Denmark, government is looking to fully convert to digital currency, although it is still unclear if Bitcoin will prevail. Central Bank of Denmark has previously stated that Bitcoin is not a currency and it will not regulate its use. Sweden, also looking to move into digital currency, the central bank's decision to cut interest rates to negative has led to a surge in demand, supporting the appetite for Bitcoin and alternatives. To protect capital. Unlike Denmark, the Swedish regulator has publicized Bitcoin as a legal currency. South Korea, there is currently no law in Korea regulating the use of Bitcoin, where people can buy Bitcoin in 7-Eleven. Netherlands, despite its huge popularity, Bitcoin is not regulated in the Netherlands, although this does not seem to prevent it, with Bitcoin ATMs, startups, and Bitcoin embassies in existence. Finland, Bitcoin has been classified by regulators as a financial service, exempt from VAT and Bitcoin purchases. Bitcoin ATMs are on the rise, and Finland is also home to one of the top peer-to-peer Bitcoin exchanges globally, Local Bitcoins. Canada, Bitcoin is regulated under anti-terrorist financing and anti-money laundering laws, with Toronto and Vancouver considered Bitcoin hubs, as Canada is pursuing the United States in the use of cryptocurrencies. United Kingdom, the BO continues to oversee Bitcoin technology, while it continues to be classified as private money, with VAT applied and also subject to capital gains tax, where P&L is involved. Australia, the former double taxation of Bitcoin has been removed, although the RBA continues to be unregulated, acknowledging that there is no law against the use of Bitcoin and that more use is discretionary. Japan, the Japanese government proceeded to legalize Bitcoin as a currency by law in early April in a move that saw the value of Bitcoin rise above the $1 trillion mark, with a some of Japan's largest retailers accept payments in Bitcoin as regulated by law. Having said that, trading Bitcoin in yen is one of the most liquid markets globally. We expect to see Russia join the list of backers in the near future, following comments from the Russian Deputy Minister of Finance that regulators will seek to recognize Bitcoin and other cryptocurrencies legally next year. The government wants to tackle money laundering, which certainly encourages more oversight and regulation, ultimately leading to its legitimacy. There is a long way to go and technology will need to improve and limitations will need to be eliminated, but with governments and regulators around the world starting to take a more pragmatic view and understand due to the need for legalization in the interest of anti-money laundering and preventive policies, Bitcoin can benefit from the advancement of central banks and the development of distributed ledgers.